who really runs these practices are the dentists, right? The DSOs don't run these dental practices, right? We support these dentists. And I think there's somewhat of a give up the ship mentality a little bit when a doctor joins with a DSO and it's like, all right, I'm with the DSO and now they're going to kind of take care of all my problems. And I think that's a real problem and something that we need to avoid, because what we try to preach within the organization is you drive the ship, right? Dentist, you are fully responsible for the clinical performance, the financial performance, every aspect of the business. Now, we have robust support services to help support you along the way, but at the end of the day, this is your practice.
I am so excited for today's episode, but before we get started with that, we need to go to the Ask Ken segment. And I really appreciate this question that came in from a listener. The question is cash basis accounting actually hurting my practice or my DSO? Now, you guys all know accrual accounting is near and dear to my heart. I love this question. The answer to it is absolutely yes. Most owners don't realize how much it can hurt them until it's too late. Cash basis is only going to tell you where your money went, not what you actually produced and the value that you brought to your patients. So again, I could go off on this for quite a while, but definitely, if you're not on accrual basis, it's something you need to be thinking about it. All right. Vince Dilley is our guest today. Vince, I'm going to hand it to you. Tell us just a little bit about your background, which is amazing, and you've accomplished many great things in dentistry. And then we'll jump right into the Dental Truth Project mission, which is we're gonna talk about things that maybe need to change or we need to think about differently.
Good. Yeah. Thanks, Ken. Well, appreciate you having me. My name is Vince Dilley, founder, CEO of Platinum Dental Services. Bootstrapped a DSO starting in 2012 all the way through 2024. Late in 2024, brought on our first capital partner. We focus mostly on adding value to practices with untapped potential and scaling those up. And we're not out there buying the premium practices. We're kind of buying the opportunities, the diamond in the rough, if you will. And so we've essentially built a platform with pretty robust support systems that help turn practices around really quickly and help grow them and, help doctors achieve really what's somewhat difficult for them to do on their own. So a little bit about what I do.
Yeah, that's fantastic. That's so great. All right. So what do you want to talk about today? What's going on in dentistry that you wish was different or you'd like to possibly change?
Yeah. Gosh, there's a number of things. Obviously, we all would love, the payer system to be different, right? You can kind of, hone in on all these things topics that typically come up. One thing that I feel like that we're probably not talking enough about, that we need to be speaking more about, is succession planning for dentists, particularly through private equity backed DSOs. And a lot of the consolidation that's has happened through the excitement, the interest around arbitrage, and doctors leaning into this opportunity that's real for them to be able to grow their equity at a faster pace than they've historically done. What I don't think is talked enough about is, what does that actually look like from an exit strategy for the dentist in the long run, right? So we've seen a lot of DSOs kind of blow up over the last few years that, they're not doing as well. Their capital partners, are not doing well and ultimately the deal didn't turn out to be what they hoped it to be. And I think, a lot of investors, I think most investors now are looking for local level, practice level alignment with their doctor and making sure that they've got ownership at the local level and being able to drive value to, at least through our process. Most of the investors were looking to have some level of local alignment at the practice level as opposed to everybody rolling up to the DSO. But in either scenario, I think what's maybe not talked about is ultimately who's going to be running that practice when retirement time comes for those doctors. They're wanting to get out, they're wanting to liquidate, not necessarily stay invested in the business. What does that actually look like? And what is the succession planning in place for them to be able to do that? I think there's a lot of friction there. There's a lot of expectations on investors to keep doctors working in the chair. And I think it's important that we start having more discussions about that. It's important that I think more DSOs are planning multi-year, succession plans in advance to liquidity events in order to, one, secure the incoming investor that these dentists aren't just going to get a big check and, sail off into the sunset, but there's a go forward plan. And two, letting doctors understand and know that, sometimes there's expectations for them to roll forward in cases where they might not be interested in doing so. And I think that's an important topic that I don't hear a lot of people talking about.
Yeah, so let's dive into that for just a second. I mean, what are you seeing there, and where are the biggest challenges, so to speak, when it comes to the doctors and the timing of their exit and liquidation and all of that?
Yeah, I think it starts on the front end. I think what we need to do a better job of as an industry,
Mm.
and some DSOs, do it quite well, is setting the right expectations from the beginning, right? There's a lot of doctors that see dollar signs and they roll this really nice, premium practice up into a DSO, expecting some type of, multiple arbitrage at a later exit, without any, additional, incremental value within that asset. And I think that those days are by and large kind of gone. If you can't grow organically within those practices and continue to show organic growth year over
Mm.
year, the investor sentiment's just very different. So one, I think we need to, be careful about these valuation expectations that people are setting for dentists as they come into their organization, and be a lot more focused on the individual operational improvements and performance at the practice level. But for us, we've always kind of bought struggling offices or offices with untapped potential. So that's what we've always done. But we do see some headwinds in the industry of those expectations being missed on behalf of doctors, which I think, leaves them with less equity than they think they're going to have, and ultimately leaves them with kind of an exit slash retirement a predicament if it's not well presented in terms of what those dollars actually look like. So I think it starts there. And then two, I think as you go forward, you have to understand most private equity investors are going to want a doctor to stay on board, a doctor owner to stay on board. And so if your ownership is over at the holdco and it's grown to be worth a lot of money, in the right case or good case scenario, it's usually worth more than what a doctor can buy into. And so I think a lot of doctors are surprised when they're asked to roll forward equity into the next deal if their plan was to get out. And so I think as DSO leaders, we need to be working with doctor partners and understanding what is their timeline, what are their plans for retirement, and can we start that transition process earlier by identifying a doctor partner who can come in. Because that's the other thing is, if a doctor who has been the doctor that's continually, producing the results for the practice, an investor is not going to be comfortable with a new doctor coming in at the 11th hour. So this guy can retire and get out because who knows what this new guy can do. Right. And so in the end, I don't think that is well planned for. Those expectations, I don't know that are super well set. And ultimately, some investors may require the exiting doctor to roll forward equity anyway. And I don't know that, that's as transparent as it needs to be in the industry.
Yeah. So as you were talking about all this, the saying came to my mind, which is what begins well ends well. And meaning the beginning of that very first conversation about a possible exit or a possible sell or a possible retirement or whatever, right? Those things, if it's set up and designed well up front, then generally speaking, we'll see good outcomes on the back end, and we'll have dentists, we'll have private equity, we'll have other partners. Everybody will be happy with, hopefully, what the ultimate outcome is. So could you maybe touch on that a minute? Like what is it that causes us sometimes to just like jump over all of that beginning stuff and go straight to valuation and straight to some of the other things that distract us?
Well, I think that's the easy thing to do, right? It's always fun to talk about best possible outcomes, right? World of, kind of initially, again, maybe not so much as much anymore, but my first number of practices were total dumpster fires, and that's all we had was up to go, right? Like that was the only direction we could go. And so for us, that's a little bit kind of within our DNA, but it's much more fun, much more easy to go and talk about the end game, the exit, the dollars, and all that kind of thing. The truth of the matter is you can roll in a really great profitable practice, and on your proposal or your term sheet, it can say, hey, you're going to get 6 or 7 or 8 times EBITDA on this valuation, but you're rolling forward 40% of your equity. Maybe you get 60% up front. Maybe you get less than that up front, but the 40%, there's no guarantee that 40% actually becomes worth even what you're getting that day on paper, right?
Right.
Because you're now part of a larger group where not only do you have to perform, the rest of the group has to perform in order for you to be able to get that. And, understanding that I think is a a big part of actually bringing that to fruition. And doctors need to understand that that's what they're getting into. And I think that's again why more and more investors are leaning into the local level, practice level alignment, as opposed to just all doctors having equity in the holdco. Having some level of local level alignment, I think, will be more and more if you're going to maximize valuation at an exit in the future.
Yeah, it's so important. And one thing that I've found to be unfortunately true most of the time is that, like when you were talking about the example of you've got a 40% equity that you're rolling into a holding company or, whatever, a lot of times those new operators may not run the business the same way you did. And they actually may not be as good of operators. We've actually seen some where they've brought in kind of outside people to run this company and they haven't performed well. And the 40% is at risk of potentially being lost once everything's all said and done. Do you want to maybe comment a little bit on that and what you've seen in the marketplace around that
I mean,
scenario?
I think that is a very common thing in the industry. I was going to say a big issue in the industry. You can read it however you want, whether it's an issue or I think, particularly in the model where you're buying these high performing premium practices, and you've got downside risk as opposed to upside risk, right? In our model, it's like we buy them when they're doing $700,000-800,000 a year, and it's like our average practice grows 48% year one, and 25% year two, and we've got all this upside opportunity, which creates a lot of equity and creates a lot of opportunity, and we don't pay these premium prices for them. On the other end of the spectrum, you pay a premium price for it, and you can't at least maintain margin. There's this downside risk to it, and when you get into who's operating the business, that's the other thing that I think that we can do better in the industry is who really runs these practices are the dentists, right? The DSOs don't run these dental practices, right? We support these dentists to be successful. And I think there's somewhat of a, give up the ship mentality a little bit when a doctor joins with a DSO. It's like, all right, I'm with the DSO and now they're going to kind of take care of all my problems. And I think that's a real problem and something that we need to avoid, because we try to preach within the organization is you drive the ship. Right? Dentist, you are fully responsible for the clinical performance, the financial performance, every aspect of the business. Now, we have robust support services to help support you along the way. But at the end of the day, this is your practice, right? We are here to support that practice. And I think, whether it's either on the doctor side or over promises on the DSO side, there's kind of this mentality that like the DSO is going to do it for me. And that is the wrong mentality to have if you're going to have continued growth.
Nice. Okay. So let's put you in a scenario where you're having a conversation with an associate in a practice, and that associate's looking around and saying, okay, this, private equity is starting to show up. It looks like maybe there's going to be a change going on. How would you talk to or coach that associate? And then I'd love to also hear, and if you want to start by, talking about whoever that lead doctor is, and, how they need to be thinking about things and what they need to care about. But then also, just how should an associate be thinking when they're hearing that private equity is coming or changes are happening in these manners that we're talking.
Do you mean in terms of their future, potential in the practice and what their
Yeah.
future might look like? Yeah. I mean, I think every model is different, right? Every DSO comes in different shapes and sizes. And so depending on what the value proposition is, what I know for sure is that the investor sentiment around organic growth and continued performance long-term is not going away. Every investor is going to want to see continued organic growth. What is the primary driver of continued organic growth or additional providers are those associates. So in my opinion, those associates are in a position to lean into that opportunity. Again, depending on what's presented on behalf of the company, at least in our organization, we are looking for our associates to become future doctor partners, because it is through our associates where we gain the most organic growth, right? We've built such a system where kind of a mediocre dentist can kind of come into our organization or partner with our organization and do their practice can grow a lot, right? Because we'll bring in specialty and we'll do all these things to help the doctors grow. And if they don't change themselves, their practice is still going to grow. But the reality is, for that doctor to continue to make more money and become better themselves, they have to grow and become better. And so I think it's a huge opportunity for associates to earn their way into ownership, something that we do. It really just depends on what the value proposition is for the incoming group. But what you pointed out is there's some groups out there that aren't, same store growth has not been the primary focus. It's been aggregating practices, it's been arbitrage, it's not growing those practices organically. And so it really depends on what the value proposition is there from the DSO. But I would say, for associates, this is an opportunity to potentially learn, to grow, assuming that the DSO that's coming in or the private equity partner that's coming in, knows what they're doing, and not all of them do.
Yeah, that last statement there. I think that's spot on. And unfortunately, we're seeing, some of the downfalls that come as a result of it. So it's a really interesting thing here because the value proposition, like the value proposition is not getting private equity. The value proposition is not any of these other things. The value proposition is a competent doctor chairside with a patient doing everything they can to help that patient be as healthy as they possibly can, right? And that's one of the things I love about dentistry is there's a ton of alignment when you get all of those people that are involved in that process. You get them all aligned. They're all pushing the same direction or rowing the same direction and moving forward. And tremendous value can come. And there's, like you said, there's opportunities for associates. Absolutely. And maybe even ownership, or maybe you know that this, Vince, better than I do, but there are some associates that they don't want equity. They want to just show up and they want to do great dental care. And then they want to go home and not think about, trying to run a business or doing anything else that's required on the side. So I don't know what's your take.
We're
I
seeing
just,
more and more of
I'm
that.
simplifying it, but it's just, it's pretty basic.
Yeah. Yeah. We're seeing more and more of that, where, a lot of doctors either have owned their own practices and they're like, I don't want the responsibility. We're seeing, docs coming out with a lot of student debt. They're like, I like the idea of ownership, but, too far out of reach from a financing standpoint. And, it's just too much risk for them to take at this point in time. We're seeing a lot more of associates wanting to have a lot more work-life balance, and they only want to work, 2 or 3 days a week. So I think all of those dynamics, those macro changes kind of in, I guess, dentist dream, what it once was, coming out, buying your practice, build it up to $1 million, and in 30 years, I'll sell it for $1 million, right? Even that has lost its appeal to some degree because, cost of living so high, right? Who's retiring on $1 million these days, right? And
Yep.
so I think that's a challenge in and of itself. And so you've got these groups of doctors who are trying to maximize the value of what they've created, which I think is probably the right thing to do. But then you've got these succession planning problems, right? Where it's just like, how do you help these doctors engage in ownership, be owners, get financed into ownership, and continue to grow the business well into the future. I think that there's plenty of doctors out there that want to do that, but it needs to be matched with a value proposition from the DSO and the private equity group that can
Yeah.
facilitate that and make that happen.
Yeah, that's right. And so much of it is about getting alignment and culture and having training programs and things that will actually help with production overall, right? And help with patient care overall.
Yeah, and have and it's got to align with the organization, right? Some doctors, don't want to go out there and be all that productive. They love just seeing a few patients a day, and you got to align with that well. But in the end, the doctor has to be the one that determines. They have to be the one that determines what services they're going to provide, what scope of care they're going to do, the balance of procedure mix, right? That can also meet both the skill level, the interest level of the dentist, but also the productivity level that drives, financial performance, right? All of those things have to be, those expectations need to be set early on. Something that I've done is I've gone to both our recruiting team and our business development team, and we've really crafted through these expectations. And we say no to a lot of people who want to come and join the organization, a lot of practices that want to come partner with us, or dentists that want to come work for us. We end up saying, hey, this just isn't a good fit, because at the entry point of the organization, we want to be sure that we're aligned in terms of all of these things so that the doctors can come in here and be successful, right? But if a doctor has a completely different vision of what kind of care they want to deliver and that kind of thing relative to our clinical board, then we're not going to move forward with a candidate that doesn't align with our values.
Yeah. So there's one last thing as we're getting close to needing to wrap up, but there's one last thing I'd love for you to comment on. And it's something that actually Patrick mentioned to me back probably a few years ago. And it had to do with the way that you guys plan out every year. And the way that you sit down with every doctor and you talk about what's happening and what's working great and where they need help and those sorts of things. Could you maybe, I just think there are some listeners out there that could really benefit from where you guys are at scale. You've got a lot of practices, but you have that touch that allows the doctor to really feel in control of what they're doing and how they're growing and how they're, taking care of patients. Would you like just humor us with how you guys think about that?
Yeah. So, I mean, our annual budgeting process starts in like late August, early September every year. And that's exactly what we do is we get with every doctor and we say, hey, where do you want to be next year? What are your goals? How much do you want to make? Right. And then we work that backwards and say, okay, to make that amount of money, you got to produce X amount this year. Break that down into a monthly and a daily number. And we forecast that for not just every dentist, every hygienist, every provider in the company. And that's really a part of our forecasting method. But I do think that, if you're going to continue to drive, double digit same store growth like we do year after year after year at scale, you have to have that level of kind of planned commitment on behalf of the dentist. Because there's things that happen. It's, I talk about our model is relatively disruptive, right? Because we'll get a practice up doing $2 million a year. And, for a lot of people, that's a great practice, good profit margins and things. But if there's physical capacity, we look for ways to introduce new providers. And depending on the size of the practice and the number of the chairs and everything else that you do, when you bring in a new provider, sometimes the existing providers have to adjust their schedules and maybe they start working evening hours, and there's all of this disruption that takes place to get organic growth. It's actually way easier to get it doing a couple millions, $2.5 million a year, nice 20% margins, and then have them grow 1% to 2% a year and go out there and buy more offices, wash, rinse, repeat, and do the same thing. Right. And I think, that tends to be the model, and we tend to, again, give up the ship a little bit.
Yeah.
And I think through that forecasting and planning process, it kind of forces the planning and the thinking around growth. And I don't know about anybody else, but our wages have gone up quite a bit since the pandemic. I think everybody else probably has too. And so the statement, if you're not growing, you're dying, has never been more true, because you can have the same revenue this year as you did last year. But if wages go up 20% and your insurance reimbursement doesn't move, your EBITDA margin goes down. So you have to grow just to maintain. And I think that planning process, that forecasting process for us has been really critical in setting the right expectations early on for doctors, so that come June of next year, when we're looking to partner, isn't just like, hey, why are we bringing in another provider? It's like, no, we planned this together based around your goals.
Yep. That's awesome. Yeah. It's a provider first model, and it's the right way to do things. And I've always been impressed by the way you guys have done everything you've done, but specifically the way you do that planning on a doctor by doctor basis. It's fantastic.
Thank you.
All right, Vince, we're going to need to wrap up here. Is there any final words or any final thoughts before we wrap up?
I don't think so, bro. I would just say, just whatever you're going to do well by the doctors, right? Take care of doctors. I think, like you just said, put them first. And if you do that, and you're financially responsible and you don't leverage up too much, then you have a high probability of success in this business.
Yeah. Couldn't agree more. Well, very well said. All right, that's it for today's episode of the Dental Truth Project. Thanks again to Vince Dilley for sharing all of your amazing information and the experience that you guys have. It's just so amazing. If you enjoyed the episode, be sure to follow or subscribe so you don't miss what's coming next. We drop an episode every Wednesday morning. I'm Ken Kaufman. Until next time, keep seeking the truth that helps dentistry thrive. Happy day.